So we talked about on the last panel if there's a bubble in the middle market, if growth equity and what's happening there. So the observations are strategic investment and strategic purchases have actually continued in Q4 15, Q1 16 at the same rate or even a higher rate than they have. However, the IPO market has completely shut down. So January saw no IPOs, February saw 3 IPOs, but only in biotech. What this means, the implication from our panel was, if you're investing in order to be acquired by a strategic, and the vast majority of historical investments have been acquired by strategics, that market is great, but that's valuation dependent. So strategics typically buy, the median is about $100 million and back up to $500 million. Makes those exits for unicorns somewhat problematic. In terms of entry valuations, the public markets have actually corrected to the 2012 levels, so we're back 4 years ago in terms of multiples in the public market. Private markets in some areas continue to be very elevated. There's some capital chasing a lot of deals. That seems to be concentrated in Silicon Valley, Silicon Alley, some of the tech hotspots of the world. And a lot of our panelists have found great deal opportunities looking in other markets, Midwest, some other cities in Europe that aren't necessarily the hotspots of technology, the hotspots of venture capital. In other words, the willingness to get on a plane and go meet companies have found very good opportunities, and we found our opportunities in that as well. Markets in terms of valuations, very high in some subsectors, but there are other sectors which tend to be ignored. And if you look at those sectors, you can find very reasonable valuations for companies with similar economic characteristics, revenue growth, gross margins, repeatability, market size, et cetera. And so we continue to look for opportunities in those markets, and hopefully that will lead to continued success.